OG John AG here. Silver is coiling, traders are frozen, and the usual drivers that should be moving this market aren't doing their job right now. If you're looking at the chart and thinking, why is nothing making sense? This session is exactly for you. The short version is this. Silver is consolidating just above its 50-day moving average, sitting inside a key retracement zone, and the market is basically refusing to move until it sees one thing: real U.S. economic data. Retail sales, non-farm payrolls, CPI, that's where the next big trigger is hiding. Before we go deeper, quick reminder. I don't sell courses, I don't sell signals, I don't run private mentorship groups or paid VIP chats. I am only on YouTube, this channel right here, John AG here, with me, OG John AG. If anyone else is using my name to push products or signals, they're fake. Ignore them. If you want clear, data-driven breakdowns without the hype, hit subscribe and drop OG John AG in the comments so I know you're part of the real crew. Now, let's walk through what's actually happening in the silver market and why this boring price action is more dangerous and more important than it looks. Segment 1, where silver is right now. According to the FX Empire piece, spot silver is drifting slightly lower today after pushing into a 50% pivot level earlier in the session. Price action shows silver consolidating in a retracement zone just above the 50-day moving average. At about 10:36 GMT, they quote XAG-USD at 82.47, down 0.84 on the session, roughly 1.01%. So we're not talking about a crash day or a runaway spike. We're talking about a slow, cautious, don't commit yet kind of move. The key phrase in the article is this. The market appears to be consolidating inside a retracement zone slightly above the 50-day moving average. The price action suggests investors may be attempting to form a support base as they await the next major catalyst. That support base, if it actually holds, is where the next big directional move can launch from. Segment 2, the weird disconnect. Nothing is doing what it should. Now here's where things get interesting. Under normal circumstances, we'd expect silver to react to a few big macro drivers. Geopolitical risk. The US dollar Treasury yields crude oil and broader risk sentiment, but the article points out that today, those usual drivers are not lining up. They highlight a weird mix. Crude oil is reacting to Iran-US tensions. Geopolitical risk is on. The dollar is down, which normally should help silver because metals are priced in dollars. Treasury yields are lower, which usually supports precious metals over time. But despite all that, silver isn't catching a bid. Gold isn't following strongly either. The macro background is saying this should be supportive, but price is basically shrugging. The author's conclusion is blunt. This disconnect tells you one thing. Traders are sitting tight ahead of this week's data. They don't want to take big positions on headlines or reflex moves when they know that real market-moving numbers are about to drop. So if you're staring at the chart thinking, why is silver ignoring the dollar today? The answer is because everyone's waiting for Wednesday's NFP and Friday's CPI, not oil headlines or minor dollar dips. Segment 3, the data week that silver is scared of. The article lays out the calendar very clearly. Silver traders right now care about three things: U.S. retail sales, non-farm payrolls, NFP, CPI, inflation. This week's theme is simple: data week. The piece says traders are expressing caution ahead of retail sales today, but the big focus is Wednesday's NFP and Friday's CPI, because those reports will heavily influence expectations for the first Fed rate cut in 2026, which the market is currently pricing for June. Why does that matter for silver? Because, as the article reminds us, there's no question that silver traders pay attention to the Fed. A big part of the 2025 rally into the January 29th high in silver was driven by expectations of 2 Fed rate cuts in 2026. The top in silver came one day after the Fed's last monetary policy statement and one day before President Trump announced his nominee for Federal Reserve Chairman. That 1-2 combo, Fed guidance plus Fed chair nomination, was a massive macro moment, and silver responded directly to it. So the message is clear. As long as the incoming data keeps 2 Fed cuts in 2026 on the table, the silver uptrend is considered intact. If the data comes in too strong and kills those rate cut expectations, this market is in trouble. In other words, traders are not really trading silver right now. They're trading probabilities of Fed cuts, and silver is just the scoreboard. Segment 4, technical map, the levels that matter. Now let's talk pure technicals, because the article gives a clean roadmap. They highlight a minor pivot at 83.61 as a key intraday decision level. From there, a sustained move above 83.61 could launch a rally into the next resistance cluster at $92.20 to $92.87. Failure to hold above that pivot opens the door to a pullback into the 50-day moving average at $78.62. A break below $78.62 could then extend losses down toward the Fibonacci level at $74.63. So you can think of it in 3 layers. Short-term pivot, $83.61, tells you if we're leaning up or down today. Trend line in the sand, 50-day MA at $78.62. As long as silver stays above this, the article considers the trend intact. Deeper support, $74.63, a Fibonacci level that comes into play if $78.62 fails. They also offer an alternative view. Just focus on that 50-day moving average at $78.62 as the core trend indicator. As long as silver is holding above $78.62 and the data still supports the idea of 2 Fed cuts in 2026, then, in their words, it's just a matter of time before the rally resumes. They even say silver should eventually pull away from the current congestion area, although the path back to the record high at 121.67 is not clear yet. So for you as a trader or content creator, this gives a perfect structure. Above 83.61, short-term bullish bias. Above $78.62, bigger trend still alive. Break $78.62. Watch out, correction can deepen towards $74.63. Long-term target zone. Previous record high near 121.67. Conditional on Fed cuts and supportive data. Segment 5. Why this boring day is actually important. The article calls today a wait-and-see session. That might sound boring, but that kind of session can be extremely important. Here's why. Silver is not reacting to geopolitics. Silver is not reacting to the weaker dollar. Silver is not reacting to lower yields. All the things that normally push and pull silver are currently being ignored. That is what markets do when they are parked in neutral, waiting for something bigger. This kind of environment often leads to condensed volatility. Price gets trapped in a tighter range. Position building. Big players quietly set up for the next move. Sharp breaks. Once the data hits, the move out of the range is usually fast. So if you're watching the chart thinking, nothing is happening, I'll just randomly trade this range. Be careful. Ranges built in front of major macro data are often traps for traders who forget what's on the calendar. Segment 6. How to think about this as a trader. If you're trading paper silver, spot, CFDs, futures, here's the logic the article implies. This is not a trade every candle environment. This is a have your levels and scenarios ready before the data hits environment. That means you should know exactly what 83.61, 78.62, and 74.63 mean for your strategy. You should know what you'll do if retail sales surprise, if NFP shocks, or if CPI changes the Fed outlook. You should not be guessing based on gut feeling when you know big scheduled data is about to land. The article basically tells you the Fed and the data are the true drivers. Everything else is background noise right now. So you can't just say oil is up, dollar is down, so I'll buy silver. The market is saying, no, we'll move when we see the numbers. Segment 7, how to think about this as an investor or stacker. If you're a longer-term silver investor or physical stacker, this article gives you a different kind of value. It shows you the short-term obsession the market has with the Fed and data, the key price zones where paper markets are comfortable building bases or breaking down, the importance of the 50-day moving average as a sentiment line in this phase. For stackers, this information isn't about chasing every tick. It's about understanding where emotional traders might panic under the 50-day, seeing where momentum players might pile back in above the pivot and resistance cluster, recognizing that short-term volatility around data does not change long-term structural arguments, but it does create better and worse entry points. If your time frame is years, the main message is the paper market is pausing, not collapsing. It's waiting to see whether the central bank story supports higher metals or not. Segment 8, what this means for your risk management. Now let's connect this to risk. The worst place to be in a week like this is overleveraged directionless, ignoring the economic calendar. Because what happens is you get chopped up in the pre-data range. You take random losses trying to front-run a move that hasn't started. Then, when the real move shows up after NFP or CPI, you're either out of capital or too scared to act. The article itself ends with a simple bottom line. Today's a wait-and-see session. The market's not reacting to geopolitics, the dollar, or yields. Traders want to see what the data says before committing. Wednesday's NFP is the catalyst everyone's watching. If professional traders are waiting, you don't need to pretend you know more than they do. You need a plan, not a prophecy. Segment 9, how I'd frame this move to my audience, for your channel. On your channel, John AG here, with you as OG John AG, you can present this as silver is sitting just above its 50-day line, respecting a key pivot and building energy. The big players are not trading geopolitics today, they're trading anticipation of data. This is the calm before a move that can easily be $5, $10 in either direction, depending on how the Fed story shifts. You can walk viewers through what 83.61 means, why 78.62 is the line in the sand, how 74.63 becomes relevant only if the 50-day fails, and why the record high 121.67 remains a longer-term target, not a near-term expectation. You can explain that. as long as the market sees 2 rate cuts in 2026 as plausible. Silver's broader uptrend narrative is alive. If data comes in hot and those cuts get priced out, the market shifts from buy dips to protect capital. Segment 10, 3 key takeaways, and we're out. So where does this leave us? Number 1, silver is consolidating above its 50-day moving average, trading around 82.47 and drifting inside a retracement zone, with a key intraday pivot at 83.61 and downside markers at $78.62 and $74.63. This is not random noise. These are the levels the market is watching. Number 2, the usual drivers, geopolitics, dollar weakness, lower yields, are not moving silver today. That disconnect tells you traders are waiting for hard data, U.S. retail sales, NFP and CPI, because those reports will shape expectations for 2 potential Fed rate cuts in 2026, which are a central pillar of the recent silver rally. Number 3, this is a classic wait-and-see session ahead of a potential volatility event. If the data keeps rate cut hopes alive, the article's base case is that silver's uptrend eventually resumes and price pulls away from this congestion zone. If the data kills those expectations, the market is in trouble, and those support levels become critical. Do your own due diligence. Know your levels. Know your time frame. If you're trading without a plan in a week like this, the market will teach you the hard way. I'm OG John AG, and this is John AG here on YouTube. If this breakdown helped you understand what silver is really waiting for, hit subscribe, tap like, and drop OG John AG in the comments. And tell me, if Wednesday's NFP and Friday's CPI come in weaker than expected, do you think silver makes a run back toward the 90s first, or do we have to test that $78 area before any real breakout? Time will tell.